We need Greenland for national security, so we're going to see what happens. We have a very good relationship with Denmark, as you know. We'll see. But, we're doing the Golden Dome. We're doing a lot of things, and we really need it. If we don't go in, Russia's going to go in, and China's going to go in. And there's not a thing that Denmark can do about it, but we can do everything about it.
President Trump refusing to budge on his Greenland goal as high-level talks in Washington failed to defuse what Denmark warns is a fundamental disagreement. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Former U.S. State Department official Conley will join us to discuss Greenland's future as Germany leads a build-up of European military personnel on the resource-rich Arctic island. The Trump administration, meanwhile, holding visas for 75 countries, targeting new arrivals who may need public assistance. We'll assess the impact with leading immigration lawyer Charles Kuck. On the markets, oil and silver falling as Trump signals he'll hold off attacking Iran for now. Investors also weighing an accelerating rotation from big tech to small caps. We'll chart a course through the market turmoil with Indosuez and Saif, who together manage more than $250 billion. Plus, Japan's ruling party confirms Prime Minister Takaichi will call a snap election, seeking to secure a mandate for her new coalition. An assessment of what it means for the economy with the BOJ, with former Policy Board member Sayuri Shirai. Danish Foreign Minister Lars Rasmussen says fundamental disagreement remains between his country and the U.S. over Greenland amid threats of a U.S. takeover. The warning came after high-level talks with the Trump administration resulted only in a commitment to form a working group for more discussion.
We have decided to form a high-level working group to explore if we can find a common way forward. The group, in our view, should focus on how to address the American security concerns, while at the same time respecting the red lines of the Kingdom of Denmark.
Let's get more with Bloomberg government editor John Hotzkovitz. John, put this in perspective for us. What did Danish Foreign Minister Rasmussen mean when he said there was a fundamental disagreement with the U.S. over Greenland after the talks?
Yeah, I think that's diplomatic underspeak. And for Greenland, this is a matter of territorial integrity, self-determination, national sovereignty. We had the Prime Minister of Greenland making his strongest comments yet that Greenland wants to stay with Denmark. We'll probably have some more talks that are going to go on between the U.S. and Denmark over this. We have the Trump administration pressing forward with very hostile threats that this can be done the easy way or the hard way. So we have the first set of talks, but for Denmark and for Greenland, this just isn't something to think about. Greenland is a part of Denmark. Greenland has its own self-determination, and this is the way that Denmark and Greenland wanted to stay. And there are things that can be talked about, like the U.S. military presence on Greenland, about ways that natural minerals can be exploited. But for now, we're at loggerheads between Greenland and the United States and Denmark on how this will go forward.
John, what's been the reaction from Europe? We had a report indicating that Germany is taking the lead in sending military personnel to Greenland.
Yeah, we could see some military personnel as early as this week from a number of European countries, Germany, France. The numbers are going to be small in terms of the actual personnel, a handful from various countries, but the symbolism is quite big. It's showing that European nations stand with Denmark, they stand with Greenland, and this is a high-stakes issue. This is something that we have seen people say it could blow up the North Atlantic Treaty Organization. So we have this symbolic show. Denmark is also indicated that it could beef up its defenses in terms of Greenland. So this is going on from Europe standing behind Denmark, standing behind Greenland.
Is there an off-ramp for this? Is there a sense this may happen?
Yeah, there's some things that could happen. I mean, there's a 1951 treaty between Denmark and the U.S., which allows the U.S. military to operate quite broadly on Greenland. Post-Cold War, there was a large U.S. military presence there. It was for missile monitoring, also for keeping an eye on the North Atlantic. The U.S. could build up its military presence through this treaty. Also, there could be like a Ukraine type of deal for exploitation of rare earths and other critical minerals that could go forward, keeping the territorial integrity of Denmark and Greenland intact. So there is an off-ramp. Whether it's taken or not is another matter.
John, thank you. Bloomberg government editor John Hutzkowitz there for us. Republican Senator Thom Tillis says President Trump is getting bad advice from advisors, including in his pursuit of Greenland. He tells us there is no support in Congress for such a takeover.
We need people to make sure the president has a fully weighted set of criteria before he moves forward on some of these policies. I see no path where his aspiration for Greenland occurs unless it's a negotiation and something far short of what he has in mind.
We talked to Senator Chris Coons at this time last evening, who I know is taking part in a bipartisan codel to Denmark with you and others. He was strident in his language, making it clear that NATO is at stake. Is that where we are?
No. I think we're going to get into a little bit of hyperbolic language here. Okay. Chris is a friend of mine. He's a Democrat. I could see where he's may take that position. But I've been the Republican leader of the Senate NATO Observer Group since 2018.
Yes.
I'm going there to reassure everyone that unlike what angered me last week was one of the president's advisors making the statement that it was the position of the U.S. government that Greenland would become a part of the United States.
Yeah.
He doesn't have an election certificate. He is not a member of the Article 1 branch. I am. It can be his position. It can currently be the position of the president. But the people, the people in Denmark, the NATO countries, our allies, our partners, the people who have gone to war with us, fought side by side with us, lost lives when they came to Afghanistan, consistent with their Article 5 commitment in NATO. I want to make them very aware of the fact that there is not support for this in Congress, regardless of what they may say in the White House. I think that an illegal taking of another territory and from a sovereign nation and a member of NATO is just not good advice. And I'm going there to tell them there's at least one branch of government that stands with the NATO alliance.
Republican Senator Thom Tillis speaking with Balance of Power co-anchor Joe Matthew there. Let's get perspective from Heather Conley, non-resident senior fellow at the American Enterprise Institute. She's also a former Deputy Assistant Secretary of State in the Bureau of European and Eurasian Affairs. Heather, good to have you with us. We heard from Tillis saying that there is no support from Congress, NATO currently at stake, yet here we are, Trump adamant about wanting to control Greenland. How are you making sense of his desire to control Greenland?
Yeah, it's been a real challenge to understand the president's motivation, other than, I think, to be a historical figure that is a president that enlarges the United States. The frustrating part about this conversation is that the United States today can strengthen its security posture in Greenland. It can enhance its economic cooperation and investment in Greenland, but those doors haven't been walked through by this administration. The president continues to focus on ownership, and the Kingdom of Denmark and the Greenland government are saying, no, we're open to cooperation. We can't go there. I think today's conversation in Washington was good, though. I think it was important for these leaders to come face to face. They've been trading, press quips and social media conversations. Have the face to face. I think we have a channel now, at least to start start this dialogue. But you're absolutely right. It doesn't change the fact that Mr. Trump is very clear that he believes the only way forward is acquiring Greenland. That's not going to be possible. And so this is where we don't know how to manage these two red lines for both.
Heather, are you suggesting that what Trump wants to do in Greenland and, the area surrounding the island can be done under the current treaty between the U.S. as well as Denmark and Greenland? I mean, even including putting ballistic missile interceptors, which has been suggested by some people.
Well, what I'm suggesting is today we have such a fulsome bilateral defense agreement in which both Denmark and Greenland have encouraged the United States, as we all are concerned about Arctic security, to do more, to be more, but it has to be done under the auspices of that bilateral defense agreement. So this is what's so confusing. The president continues to talk about Arctic security, and Russia in particular is concerning their posture in the Arctic, as well as China's. But we could do more, but we insist on this ownership question, not enhancing security. And look, I think our European colleagues take the president very seriously at his word. This is why there's going to be an exercise. Arctic Endurance is going to have a small number of NATO allies, Sweden, Norway, France, Germany in particular. This is symbolic, but it's also a message by our NATO partners to say we are defending Greenland, which is NATO territory. But it's such an extraordinary moment to be, contemplating defending this island, beefing up security because of concerns about the United States.
Heather, talk to us about the strategic importance of the Arctic area, because we know the Russians and the Chinese do have interest there as well.
Yeah, and this is where, the president is right. For far too long, we have not understood the strategic importance of the Arctic. And so we've seen Russia increase its military posture, opening up new military bases across the Russian Arctic, increasing its hybrid activities. That's certainly from the use of cargo ships to deploy drones over oil platforms. We certainly have seen some undersea capabilities that look at subsea cables and things like that. We're also seeing a more significant Chinese economic and scientific presence in the Arctic that has dual use applications as well. And so the Arctic nations have to be prepared for this increased Russian and Chinese presence. But I want to be clear, this is not a China takeover or a Russia takeover. That is exaggerated. But we have to have more icebreakers. We have to have more satellites to make sure we are seeing what's going on, more presence to meet this challenge. And we can do that strongly with the 32 members of NATO. But if we're working at cross purposes with NATO, if we are working at cross purposes with our allies in the Arctic, we're weakening our security and we're weakening Arctic security as well.
Well, the thing is, Heather, we heard from President Trump. He talked about warships, submarines, Chinese warships and submarines surrounding the island. Is there any truth in that, or is it an exaggeration? What are we really seeing around Greenland?
Yeah, so the irony is probably the most activity we've seen of Russian and Chinese vessels has been around Alaska in the North Pacific, not necessarily in Greenland. Look, we have seen an increase of Russian submarine activity. Again, the Greenland-Iceland United Kingdom gap, that is that important gap where Russian nuclear submarines come through and can potentially threaten North America and the eastern seacoast. We've seen Russia modernize their nuclear fleet that way. We know undersea cables are being cut. And so much of the Chinese science that's happening in the Arctic is on the seafloor, acoustics, mapping, hydrographic mapping of the seafloor. This has important implications for future deep sea mining potentially, but it's also mapping those undersea cables and potentially would allow for greater Chinese submarine activity potentially. So we have some time to prepare to make sure we can monitor and detect threats, that we can deter threats. And so we have to take it seriously. So again, President Trump is highlighting the right issue. We need to strengthen Arctic security. Our allies agree with that. NATO agrees with that. But ownership isn't the right way. It's working in partnership and strengthening NATO's resolve and getting more capabilities to the region.
NATO has said it will be sending personnel to Greenland. How destabilizing is this development to NATO, and how much confidence and trust have been dented already? Can that be recovered?
Yeah, this is the real challenging part. Our European allies have been working very hard with President Trump to find a path towards peace for Ukraine. And this conversation on Greenland, NATO now has to contemplate a security challenge potentially from the United States. It just seems so hard for us to grapple with this. But as I noted, European leaders take the president very seriously. They have to prepare for all eventualities. And so in some ways, the NATO sending and exercising forces in Greenland, it accomplishes and enhances Arctic security. That's good. It deters and detects potential threats. But it's also some reassurance to the Kingdom of Denmark and Greenland that European NATO members will protect Greenland from any eventuality. And that's what, again, that's not what NATO was designed to do, to protect from other NATO members. So it's unfortunate. So hopefully we'll get the increased deterrence, which is what we want, and try to rebuild trust with all of our NATO allies. We've got to be pulling on the rope the same way because the challenges are growing every single day.
It's destabilizing not just for NATO, but the rest of the world. In just 10 days, Trump has managed to attack Venezuela. It's making moves on Greenland. It's imposed 25% tariffs on everyone who's doing business with Iran. What do you make of the U.S. foreign policy right now?
Well, I think as the national security strategy that was just released at the end of last year was fairly clear, the United States is moving towards Western hemispheric defense, and that has both a southern exposure, and that's, of course, the actions in Venezuela, and it has an expression in the north, and that's Greenland. And I think it's very clear the president uses his leverage, as he would call it, the great strength of the American military, the great strength of the American economy and our trade and investment to bend many countries to his will and what he seeks. You get a lot of ground that way in the short term, and I think the United States is demonstrating its incredible military and economic power. You get short-term results that countries may, act and support what you're doing. But as you noted, it's the long term. It's the loss of credibility. It's the loss of trust, particularly with our allies. So if our allies begin to defend against the United States or hedge, that weakens our great strength, which is this global alliance structure, which is both a security as well as an economic strength for the United States. So we are moving in a different phase for sure. And as you noted, 2026 has certainly, in just 15 days, and we are focusing right now on Iran and what the president plans to do there. It's really significant military and economic action, but with unknown long-term consequences. And I think that's what we're all struggling with today.
You talked about how in the long term, American power politically, economically, will be undermined. What will that mean for global alliances? Many have suggested that China is actually benefiting from all of this. Chinese President Xi Jinping is, in fact, meeting a lot of global leaders who are gravitating towards China because of what the U.S. is doing in the world today.
Well, I think the Chinese government is certainly sending a message that they are a stabilizing presence, international law and rules. And as they compare to the Trump administration's actions, coercive actions on tariffs and military strikes. But I think many countries see through that. They understand that China itself, its economic practices bring harm to countries. I think China is also reeling a little bit from some of these actions. Its relationship with Venezuela, potentially its relationship with Iran. The destabilization does have implications for China and their global footprint as well, economically and militarily. So I think what you're seeing is this attempt at spheres of influence where the United States controls or seeks to control the Western Hemisphere, but we're going to see an enormous amount of instability. I don't believe China is going to be able to take full advantage because the United States, for the past 80 years, has had such a unique role in not only structuring the international system with our global alliances to strengthen security and prosperity, but we did enforce those international rules and norms. And if we break them ourselves, or if there's no one to enforce them, then it does become a system where the stronger, larger countries will take steps and actions that could harm neighbors, harm sovereignty, territorial integrity, and that's a highly, highly unstable world.
It does seem like a world without rules. Heather, after what we've seen in the last 10 days, I think it is a valid question. Who is next? Who will be targeted next? Trump, of course, has cited quite a number of countries. From your own observation, is it fair to be expecting other countries to be targeted as well?
So I think we're going to continue to see this very muscular policy. Just in 2025 alone, we had, I think, upwards of 8 countries that we struck with airstrikes. I think we're going to see that continued in some ways. The incredible military operation in Venezuela did give the president confidence, emboldens him to take these measures. And I think, again, what we are not keeping in mind is there is a cumulative effect of these airstrikes and of these very aggressive outward policies. Right. And I think the president's seen some of that challenge domestically with the affordability agenda versus the foreign policy agenda, which he is implementing right now.
Heather, great perspective. Thank you so much for that. Heather Conley, non-resident senior fellow at the American Enterprise Institute. Coming up, as traders accelerate a rotation out of big tech, we dig into the outlook for AI investment with Indosuez Wealth Management CIO. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. As far as the market goes, some weakness in Asian benchmarks, down for a first day in 3. Coming off, of course, record high, so ain't too shabby. The Asia-Pac index currently down by 0.2%. The Kospi, though, higher by 0.5%. And by the way, the central bank in Korea left its interest rates unchanged at 2.5% for a 5th straight meeting, matching pretty much the expectations of the market. That decision coming on the back of an economy that's showing resilience. It did raise its 2026 growth forecast to 1.8%. Still to come, TSMC set to release 4th quarter earnings later today, and investors will be watching the AI outlook and capital spending plans. We're live to Taipei next for a preview. This is Bloomberg. Welcome back. You're watching Insight. We're keeping an eye on shares of TSMC as the chip giant prepares to release its fourth quarter results later Thursday. The stock has been on a blistering rally powered by the AI boom. For more on this, Bloomberg's Asia Tech correspondent Annabelle Julius joins us from Taipei. And Belle, what are investors watching out for?
Well, they're going to be watching out for a lot of different things today, but I think you just mentioned there, AI is certainly going to be really one of the big watch points for us because the expectations are actually strong going into the figures. I wish you could see the room behind me. This is where the TSMC earnings conference is going to take place in a couple of hours. They've just shut the doors on us to take those final checks. But essentially, yes, we'll get the figures after the bell, we get the presser, and then we've got a big interview following that. But the numbers, as I said, we have already the sales figures for October, November, December, and if you put those together, we are expecting a revenue jump of around 20%. That would be ahead of analyst expectations. That's the quirk, of course, for companies that are listed on the Taiwan Stock Exchange. They do need to report those monthly sales figures. And we're also coming off the back of CES, and we had a lot of different bullish announcements from the likes of AMD, but also NVIDIA affirming that ramp up of the Rubin architecture. So TSMC, of course, the leading manufacturer for this kind of technology, is in a very good position going into 2026. In terms of what that means for the business, I mean, one of the key points as well is going to be margins specifically, because we actually could see those hitting a 3-year high in the fourth quarter of 2025. And that's as they get more pricing power of as a business. It could be between 59 to 61%. Again, well ahead of what is the company's longer-term projection or push, which is 53% or more for the business. So they're just some of the key things we're going to watch later.
Belle, what about TSMC's plans for the U.S.? We know that Taiwan is still in negotiations with the U.S. On tariffs.
Yeah, exactly. And I think it's really perfect timing, at least for us as journalists, going into these figures today. But you do have that reporting, and including from our Bloomberg sources that are telling us that you're in the real final stages now of the Trump administration hammering out some sort of accord with Taipei. There's a lot at stake, really, for TSMC, because what we're hearing again from sources or people that are close to the matter, they're saying that in exchange for the US lowering tariffs on Taiwanese goods going to the States to 15% from 20%, TSMC actually could be looking to pledge a lot more capacity in Arizona. So already you've got promises to build 6 manufacturing plants, 2 advanced packaging plants, but they could be looking to add a further 4 to that. It's a very hefty CapEx announcement, given that each fab costs around $20 billion to build, essentially. But the CapEx, we saw it around $40 to $42 billion. That's the estimate for the full year 2025, 2026. Pretty much every analyst you speak to is saying it's going to exceed that, so somewhere up to $48 billion, even higher. But again, lots of questions. How much of that goes to the States in particular, and how much, of course, goes to their more advanced nodes that they're also trying to build out?
And Belle, what else will be in focus today?
Yeah, I just mentioned those advanced nodes, so that's going to be one of the key watch points for us, because the expectation is that we should have seen, at least from Capital Securities, one of the analysts, but saying that we should have started to see that go into mass production just at the end of last year. That could actually end up contributing a lot more revenue in the financial year 2026, so N2 in particular, but advanced nodes generally. And then I think also smartphones is going to be really interesting to track, because demand from smartphones still makes up around 30% of TSMC's revenue, at least at the third quarter of last year. That was the point. But we are seeing lots of concerns around memory chip supply crunch essentially hitting in 2026. What does that mean for devices, and what does it mean for PCs as well? Does that have any sort of bearing on TSMC's numbers?
Belle, thank you so much for that. Bloomberg's Asia Tech correspondent Annabelle Julius for us in Taipei. Now we'll hear more from TSMC on their earnings and business outlook. Catch our interview with Senior Vice President and CFO Wendell Huang. That's happening on Friday. And our next guest says we are just at the beginning of the AI investment cycle, which he believes will continue to lift corporate earnings. Let's get insights from Alexandre Drabowicz, CIO of Indosuez Wealth Management. Alex, good to have you with us. So still upbeat about AI and tech plays despite the rotation we're seeing at the moment.
That's right. I mean, we think we are actually just at the beginning of this AI wave. It was pretty clear when I heard from TSMC here that the CapEx investment boom is here to stay and potentially accelerate. So I think we are looking at a kind of diffusion of these AI-related investments into a kind of productivity boom as well, because at the end of the day, this is what AI is about, also is to increase productivity. So it means for us it's going to be margin expansion. We are probably going to move from the hyperscalers much more into the broadening of the AI trade. We favor, for example, small caps in the US that has been outperforming actually significantly the broader S&P market for the past 6 months. And I think this is a reflection as well that a lot of investors are probably too much an over-concentration to the AI-related names, and now they are moving to the other side of the market, playing this productivity booth, but also the catching up of the rest of the market. So still very positive there.
So there's still concentration risk, yet you say keep your money in the U.S. to play AI small caps. Why not the rest of the world? You get better valuations in countries like China.
Absolutely. No, that's absolutely right. It's a fair point. Now, to address this AI concentration in the US, right? So we have on the one side the broadening in a small cap within the US, but first, the second way also to diversify and to manage this concentration risk is to go to Asia. So we have been bullish on emerging markets for the past 18 months. It is a way to catch a different wave of AI in AI-related names in Asia that, in our view, where growth is significant, prospect of earnings growth is also very, very good. And globally speaking, we can feel and we can say that a lot of global investors remain underweight the region. So this is why I think there is some catching up to do. Particularly, I have met a few institutional investors here in Asia, and the feedback we are receiving is that a lot of international investors, whether from the Middle East or whether from Australia and that part of the region, are still underweight China and AI-related names, and they are looking to deploy capital.
So with that expected rotation, do you see Asia, emerging markets in particular, still outperforming developed markets, particularly the US?
Absolutely. Yeah, this is our, I would say, largest bet in our global portfolios today on emerging markets. I think global investors remain underinvested in Asia, in particular, or globally in emerging markets. In 2026, finally, we might see actually a much stronger earnings growth in emerging markets, which probably was lagging. China, for example, didn't really deliver a strong earnings growth. So there's been more a re-rating of the valuation of the market for the past 12 months, but we are probably now moving into the second phase, where this time not only valuation can continue maybe to close the gap with the US, the MSCI emerging market and MSCI Asia continues to trade at a 25% discount to the market. And we have prospects of about 10 or 15% plus earnings growth this year, which will be more or less equivalent to the US, but at a much more affordable valuation.
You talked earlier about how you should play AI by playing the small caps.
Yeah.
But how about the AI ecosystem? What's looking attractive? Some say play the grids.
Yeah, no, absolutely. Electrification is a very important theme, which can be played also by small cap related names that are suppliers to the chain, as you mentioned, of this AI ecosystem. And there are hundreds of companies in the US that can benefit from this electrification, everything relating to the data centers, everything related to the water and the coolage of data centers. So it is indeed a much broader set of domestic companies in the US, because we have a huge capex boom in the US related to data center, and a lot of smaller and domestic companies are the ones that can reap the benefits of those investments.
Of course, there's still those who say there is an AI bubble. There's a huge risk out there because there's a lot of uncertainty, especially surrounding ROI. I'm just wondering whether there is value in investing in non-AI players as a hedge or even as a core strategy.
As a core strategy, probably not. I think yes, there are some areas of the market that are red hot on AI, so you have to be a bit more maybe valuation conscious. I think we are moving from this time frame where everything .ai was actually bought by investors without really looking at the ROI or the capacity to monetize those investments into profit. We are now moving more to the second phase of AI, which is actually to find the winners and the losers. So there will be more dispersion. It's actually going to be a much more favorable market for stock pickers with value to be extracted for sure.
What are the biggest risks to your investments this year in particular?
Yeah, so that might sound a bit of a paradox, but we are looking for growth actually to pick up in the US this year. We're having our Global Investment Committee at Indosuez this week, and we're going to be upgrading our US growth forecast to 2.7%. It's on the one hand related to the fact that you have the fading effects from tariffs. The US consumer is very, very resilient. It was very interesting to hear the comments of the U.S. banks overnight. One CFO of an American bank said the consumer is in great shape. So we continue, I think, to underestimate the U.S. consumer. And linked to that is that you have an economy that's going to be quite strong. 2.7 is out of consensus. It's well above consensus. Let's imagine that you have a Federal Reserve that actually cuts rates much lower. We have ourselves only one rate cut for the year. But that will be a situation where the market will have a rate cut into a red-hot economy. This is not going to be liked by the bond market. So you would expect, for example, in that risk, which is not our central scenario, but in this risk, a shoot-up in bond yield. And you will reach to the point where the bond yield will actually be a pain point for the equity market. So this is my biggest risk, is that a red-hot economy in which the central bank is cutting rates and the bond market won't like it.
How do you play the bond market then?
Today, we shy away, actually, from government bonds in the U.S., so we tend to be what we call underweight duration. We rather focus on credit, that is, companies with solid balance sheet, attractive yield, and lower maturities. That helps us basically to have a good income for our client. We also like to diversify in fixed income by going into emerging market, local currency debt, i.e., we invest into government debt issued by emerging market countries in their own local currency. And that helps us also not only to benefit from a good carry, but also from the fact that those local currencies continue to appreciate because we continue to have a cautious view on the US dollar.
Of course, lots of speculation, perhaps debate on de-dollarization. Where do you see the dollar headed? And what do you make of the Chinese yuan, for instance, which is showing a lot of strength?
Absolutely. So we have been cautious on the US dollar for the past, since April last year. We continue to be cautious, and we advise our investors in private wealth. People don't understand quite often the FX risk when they invest in overseas market, right? So because by definition, they are not hedged. For example, for European clients, whether they are Euro-based or Swiss-based, we advise them to actually hedge the currency risk on the US market so they can retain really the local market return, not to give up on the FX side. So today we are cautious on the US dollar. It's also visible in the flows because more and more clients and ourselves at Indosuez, when we get exposure to the US, we will actually get exposure to ETFs or funds that are also hedged to the dollar. And that phenomenon has been global. That is, we are not the only one doing it. Flows are showing that basically money flowing into the US up until April was not hedged. And since April, about half of the flows going into the US are now hedged. And I think so it's not that people sell US assets. They are not giving up on US assets. They continue to buy US assets, but they rather put aside the FX currency risk in order to retain the market return.
Alex, thank you so much for dropping by today. Alexandre Drabowicz, CIO of Indosuez Wealth Management. Up next, with the U.S. visa crackdown and ICE backlash making headlines, Kuck Baxter, founding partner Charles Kuck, joins us from Atlanta to share his analysis. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. The U.S. State Department is set to stop issuing immigrant visas to people from 75 countries. A source says the order is likely to target foreigners that authorities believe could require public assistance while living in the U.S. We're told the move would apply only to people seeking to live and work permanently in the U.S., not tourists or temporary workers. Impacted countries include Brazil, Somalia, and Iran. And we want to show you live pictures out of Minneapolis. The U.S. Homeland Security Department has confirmed reports of a federal officer shooting a person in the leg there during a traffic stop. Officials say the victim was a Venezuelan illegal immigrant attempting to evade arrest. A group of federal agents and Minneapolis police wearing gas masks has now fired tear gas into a crowd gathered close to where the shooting happened. Joining us now, Charles Kuck, founding partner at Kuck Baxter and a leading immigration lawyer. Last year, he represented South Korean nationals detained at a Hyundai facility in Georgia. First off, Charles, your take on what we're seeing in the streets of Minneapolis.
Honestly, this is insanity. There's just simply no legitimate purpose that the Trump administration is doing this other than to spread fear and panic, both among U.S. citizens and among immigrants.
There is rising pressure to prosecute protesters. I'm just wondering, what's your take on how aggressive the handling is when it comes to protests?
Well, the Trump administration has decided to take a very aggressive approach to protesters who are clearly exercising their legitimate rights to both record, to taunt, to harass these officers. They're not physically doing anything to them. And we know today that officers were reminded by their bosses that they can be taunted, they can be yelled at, they can be followed. All of that is legitimate protesting in the United States. What the Trump administration is doing, however, like these pictures show, throwing tear gas, shooting some protesters, in fact, killing a woman last week, when in reality, their lives are not threatened in any way. And none of this is doing anything to, quote, capture bad, undocumented immigrants in the United States.
Is there legal basis for it? And is there a recourse for the people?
Well, in the United States, the Constitution basically says and limits the rights of the police in regards to arresting individuals, in regards to entering houses. The police in our country can, in fact, stop basically anybody within 100 miles of our border, whether that's the northern border or our ocean borders, and ask for identification. U.S. citizens, however, are not required to carry any identification to show they're U.S. citizens. But foreign nationals, including permanent residents, are required by law to carry their documents with them and produce them if asked within that area. What immigration is doing here, however, in Minneapolis, which is by, of course, our northern border, is a little bit beyond that. They are literally going door to door in some neighborhoods. We've seen them break into houses, which is a violation of our Fourth Amendment. And we've seen them do things intended to scare away protesters and those objecting to their presence. The only way to really stop this, though, is through a court order. The courts have been reluctant to intervene dramatically in what the Immigration Service is doing. But the other way is to file civil rights actions against the Department of Homeland Security. And we're beginning to see that in greater volume. Once that volume hits thousands of cases, I think perhaps the courts may then really intervene and order ICE to stop in the manner in which they're carrying out these raids. One thing I can tell you, their ultimate goal is to arrest undocumented immigrants. This is the exact wrong way to do that.
Charles, we hear that's been a backlash. Reports suggesting that perhaps U.S. attorneys in cities like L.A. and Chicago are making an exit. They're leaving. What are you hearing? What are you seeing on the ground?
Well, first of all, we're only seeing these troops in what you would call blue states in the United States. These are states that voted not for Trump in the last election. Most of our cities in the United States are run by Democrats. They tend to be more liberal places, places that do not support Trump. They also tend to have policies in place that protect immigrants and do not cooperate with ICE when somebody is arrested, for example, for an accident or driving without a license. These states tend to not hold them for ICE to come pick them up within 48 hours. What we're seeing actually is a backlash against people who didn't support Trump. We're not seeing them in places like Atlanta. The state of Georgia voted for Trump this time. So we're not really seeing this level of activity here. Plus, something more important, we're not within 100 miles of the border. So the Border Patrol really can't be here, and ICE really can't be here to do the things that they're doing in Minneapolis, in Chicago, in Los Angeles, which are within that 100-mile zone. We'll see what happens beyond this. I suspect that ICE will be in Minneapolis for another few weeks before it becomes evident that they're not meeting their goals in arresting or detaining individuals. And then they'll move on to somewhere else.
And Charles, in Trump's latest move against immigration, he's putting a pause on immigration from third world countries. Is there a sense that this is a judicial overreach?
Oh, this is definitely beyond the scope of what is normally allowed in our republic. Congress controls the immigration laws of the United States. The president simply enforces them. And while the president is given some authority to bar entry into the United States from countries with an articulatable reason, and he did that for 39 countries, although that is subject to judicial challenge, this latest announcement is simply about the Department of State slow walking or even not issuing visas. The Department of State has had rulings against them several times in the last 5 or 6 years when they've done this, and each time the courts have ruled, no, you must adjudicate visas, you must issue visas, you have to make a decision. So I suspect there'll be additional litigation. I know myself and some colleagues have already filed litigation for those from the original 39 countries, and we'll be adding people from the rest of these countries, 70% of whom are from Africa. No surprise with this administration, but 2 are from Asia. We have Cambodia and Thailand on this list. We'll sue, we'll win, and the Department of State will have to issue these visas. What they are doing, however, with this crackdown is basically using as an excuse that people from these countries may abuse our welfare system without any factual evidence to begin denying visas. And this is how the Trump administration intends to slow down legal immigration to the United States.
How much leverage do you have, you think, Charles?
Oh, we have a lot of leverage in the courts. Once we get an injunction against the administration, they will be forced to begin adjudicating these cases. We suspect that will happen in the next 30 to 60 days. But there's going to be this pause for the next couple of months, specifically from these countries, where they're simply not going to be able to get mostly family-based visas. This ban, the 75 countries slowdown, is really on immigrant visas. It's not necessarily on visitor visas. It's not necessarily on employment-based visas. But 39 of these countries actually have a ban right now where they, even if they got a visa, they couldn't come into the United States.
Charles, thank you for your perspective today. Charles Kuck, founding partner at Kuck Barter. Now, still to come on the show, we get analysis on the economic and policy impact of Japan's plan for a snap election with former BOJ board member Sayuri Shirai. Plus, SIVE's Ritesh Ganeriwal will be with us to talk AI, gold, and the top investment themes for 2026. More to come in our next hour of Insight. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here's a quick check of Asian markets. Mixed trading day today with crude oil sliding for the first time in 6 days after President Trump signaled he may hold off attacking Iran for now. Precious metals, including silver and gold, also slipping, coming off record highs earlier this week. We're also tracking moves in Japanese stocks as the LDP confirms Prime Minister Takaichi will call for an early election. Takaichi's decision is a gamble aimed at shoring up her leadership and securing a mandate for a new coalition. For more, let's bring in our Japan economy and government editor, Paul Jackson in Tokyo. Paul, I know she wants this mandate. What can't she do without it?
Well, I think What we've got here is an administration that's lacking longer-term stability. We have got a razor-thin majority in the lower house of Parliament, and that's testimony really to how Prime Minister Takaichi has already managed to cobble together a new coalition and bring some independents on board. But it's still razor-thin, and she wants to kind of move the needle on policy. She doesn't want to be a Prime Minister that just goes through a one-year stint, a leader who just takes her turn on merit in the LDP. No, she wants to leave a legacy, make a mark, and she wants to move policy forward. And as we've already seen in her first, barely 3 months in power, she's unveiled the largest extra budget since pandemic restrictions were relaxed. She's brought forward a bump in defense spending. She's gone further than previous prime ministers in spelling out some of the scenarios around Taiwan, comments that have ruffled feathers in Beijing. She's already left a mark, and that's showing in soaring popularity ratings. And that's what she's trying to capitalize on before we get into another parliamentary session where those ratings could start to suffer.
You talked about the high ratings. Could she successfully convert those ratings to actual votes? What are the risks out there?
Well, I think we've got two main risks here. One is the fact that a lot of this is based on her personality. It's a direct appeal to voters. It's the kind of appeal we've seen previously with prime ministers like Shinzo Abe and Junichiro Koizumi. If you look at the actual support for the party, for the LDP, we haven't really seen much of an uptick there. And there's a lot of these smaller parties kicking around that are very flexible and good at honing in on issues that are frustrating voters. So it's whether those high opinion poll ratings for her personally will convert into election victory. I think there's a good chance of that. We've seen that supporters of Sanseito and the DPP are favouring Takaichi, so there's a good chance of that happening. The other thing, of course, to mention is that this is a new coalition. For a quarter century, the LDP has relied on Komeito, a kind of centrist opposition party that's been brought into the coalition as supporting, bringing out voters for the LDP. The classic approach is they support the LDP candidate in a constituency, and then the voters then vote for Komeito in the proportional representation segment. And this serves both parties, has done for more than 2 decades. Now, Komeito has bolted the coalition and now looks to be set to even merge with the largest opposition party, the Constitutional Democratic Party of Japan, and form a powerful opposition party there, which would still, at the current level of seats, would still be about 61 seats behind the ruling coalition. But that could stymie the attempt at building a bigger majority in the lower house.
Paul, we know the markets are nervous. The yen has been slumping. JGB is also down. Can Takaichi continue to just shrug off what the market's saying about her fiscal spending plans?
Well, I mean, that is an important question. I mean, I think we are seeing the yen very weak levels that really, I would say, are out of line with rate differentials and where it should be. I think it should be actually stronger. But there is this idea that Takaichi strengthening her position is going to lead to more looser spending by the government. This could be bad for the longer-term finances of the government. Of course, Prime Minister Takaichi is trying to talk back that, talk against it, saying, no, this will not. We will have a stronger economy that grows at a faster pace. So this won't be bad for the finances over the longer term. So far, the market is not buying that.
Paul, thank you. Our Japan economy and government editor, Paul Jackson in Tokyo. For more on the economic impact of the planned snap election, we're joined by Sayuri Shirai. She's a former Bank of Japan Monetary Policy Board member and now a professor of economics at Keio University. Sayuri, good to have you with us. Of course, we're seeing rising yields in Japan. Markets are pretty nervous. They're concerned about the fiscal position of the country. What do you make of what Sayuri, or rather Takaichi, is planning to do?
Yeah, I think her announcement really caught by surprise, and the people actually do not have a very positive view about this snap election because she's actually doing, her work from November. Because after she's elected, she was busy for foreign policy, so she just stayed in her position for 2 months, and then just submitted, and passed the 2025 supplementary budget only. So she hasn't really done anything, right? Detailed economic policy, and people are still suffering from high, prices, and people are really suffering. So, people feel that she has to do more policy rather than doing elections. So this is really, people are really wondering and puzzled by her announcement.
What do you make of the market reaction? We see continued weakness in the yen and the continued rise in Japanese yields.
Yeah. Yes. So yen is super sharp, super cheap, and it's very bad, and it's affecting our, prices, and in a negative way. It's a cost push inflation. But because at the beginning of January, there's a lot of uncertain economic policy and foreign policy developed by United States. So I thought this may give a chance for Japanese yen to start to appreciate a bit more because interest rate differential is shrinking. But now there is a lot of uncertainty in the Japanese politics because she really made anger among the ruling party because she made all decisions by herself without any prior discussion. So there is a lot of anger and anxiety in the political era. So I don't know how much she can do, keep the leadership, and whether she can do more meaningful economic policy. There is a lot of uncertainty. So I think the stock prices will continue to be very volatile. Yen direction is not clear. Yen can be depreciated more because of an uncertain Japanese environment, or it can appreciate if more surprise happen from U.S. side.
Some hedge fund managers are saying that perhaps the yen could get to 165 before we see any intervention. Talk to us about the kind of movements you're expecting in the currency.
Yeah, so just looking at the interest differential, it started to shrink, and it will shrink further. So yen should start to appreciate to 150 or 155 this year. But at the same time, how market will react to this growing uncertainty among Japanese politics, we don't really know. So it might really trigger even more depreciation. So anything will happen, I think, this year.
How worried are you about a weakening currency?
I'm very worried. The biggest problem in Japan is the yen's depreciation. But the irony is that because currency is depreciating, we still have a large number of foreign tourists, despite the decline in tourists from China. And also because of the depreciation in yen, export sectors are, getting benefit. So that's also contributing to the higher Japanese stock prices. So yen looks very good for exporters and the stock prices, but at the expense of Japanese consumer. So this is a problem I think we have to correct, this exchange rate movement.
How do you think the BOJ is looking at the movements of the currency? Is it likely to perhaps encourage it to raise rates earlier than anticipated? Could we see a rate hike perhaps, in April?
Okay, so January, it's impossible. They will not take any action. So the next one will be March. I think it depends on how successful her election result will be. It can go very successful. She may lose the seat because there's a lot of uncertainty about her support ratio. So we don't really know. So I think BOJ have to wait and wait and see what will happen to her leadership. So it's possible April, but also Japanese economy is very sluggish. sluggish. Yen is depreciating. So, BOJ knows domestic economy is so weak, so they are not supposed to raise interest rate. But at the same time, they have to really appreciate currency because cost push inflation. So that really encourages them to raise interest rates. So Bank of Japan is facing dilemma. So it's all up to whether Takaichi can keep strong leadership. So after election, so April it's possible, but we have to see how much she can win.
Might the BOJ be looking out for what the Fed does? We were expecting the Fed to cut rates twice, but some say now perhaps only one. Are those considerations for the BOJ?
Yeah, so for BOJ, if the U.S. can lower interest rate, that can lead to the decline in interest differential. So it may be able to appreciate our currency. So that is good thing. But at the same time, we don't really know because the U.S. inflation is still quite high, especially services inflation. So, still way above 2%. So, Fed may be very careful about, how to deal with this price stability issue. So, it's good for Japan if the Fed can lower interest rate. But at the same time, it's all what happened to this U.S. government pressure against the Federal Reserve and independence. So, there is a lot of uncertainty.
Rising JGB yields is another one that we're watching. In fact, 5-year yields rose to the highest level since its debut back in 2000. What do you make? How concerning is this?
So since the Bank of Japan started to normalize monetary policy, the 10-year yield started to go up and then way above 2%. I think, it's quite understandable because of this Takaichi's leadership, and then she's doing expansionary policy. So that kind of risk premium is reflected there. But at the same time, Japan's economy is so weak, potential economy is so sluggish, like 0.5%. Neutral rate is maybe negative. So I don't really see a 10-year yield go up very high. So it go up a bit more, but maybe not too high because it's a very weak, economic fundamental.
If we do see Takaichi winning the mandate and imposing the fiscal measures that she's intending to impose, how much of a boost will that provide for the Japanese economy?
To be honest, it's not so much. Actually, 2025, supplementary budget, she really increased the JGB issuance quite a lot. And then she said under the name of price stability, she tried to spend a lot of money by providing money to the local government and cutting energy tax and etc. But people really do not take it positively. I think a time change in Japan. In the past, ruling party always show big numbers and big supplementary budget number, and they try to show, okay, we are supporting public. But people started to understand the big debt, right, 230%, and the interest rate is going up. So people really know these pros and cons. So no longer, it's not a time for Japanese public to really cheer the expansionary policy. So, people really do not take a very positive attitude against her expansionary policy. So, things are changing very quickly in Japan.
So what are the right moves? What would you like Takaichi to do to reverse the picture of the Japanese economy?
Yes, I know it's very clear. What she should do is not to show the numbers. Because while she's trying to show the number like bigger expenditure or tax cut, but social security premium, the payment is increasing. So net, the disposable income is not really improving. She has to make it clear. It's more transparent fiscal policy. Japan is very opaque, very complicated fiscal policy. Nobody really understands. She has to spend more time to really digitalize the Japanese government and try to connect their database and have more effective fiscal policy. It's very clear. She hasn't done that. She has to do what she has to do is clear fiscal policy rather than showing the numbers.
Post-election, what is the first thing she needs to do?
What she needs to do is we have technology, we can digitalize our government, but right now all of those database, security data or tax data, central government data, all disconnected. she knows what she can do. All she have to do is try to talk with the ministry and the government and try to coordinate those the action to promote digital government. Japan is one of the countries which are very slow in terms of digitization, starting with the government. So she knows what she have to do. We have a digital agency, but they don't have any powers. So that is what she have to do. Try to make it transparent and make it more effective fiscal policies. That is what she needs to do.
Sayuri, this is all happening against a backdrop of rising tensions between China and Japan. Might that impact the growth outlook even more?
I think it's already affecting China is the number 2 big country now, and this tension created between China and Japan, according to the opinion surveys, more than 50%, 60% of people say they are concerned about this deteriorated relationship. So I'm hoping there's a way to improve our relationship, and then China is so big, and so that is, I think, a lot of people's concern. So. And so, this is about the issue of sort of courtesy, right? Courtesy and toward China, but also, she kind of, doing everything herself. So I don't know whether she have a lot of advisors around her, but I am hoping that we should try to reduce tension and try to have a better relationship and coordination with the neighboring countries.
And the biggest risk for the Japanese economy this year would be?
Yes. Okay. So there is a lot of uncertainty about the U.S. economic policy, and so that is the biggest concern. What will happen to U.S. economy? That will influence Japanese economies. And the biggest concern is the yen's depreciation. So if yen starts to depreciate even more, that is very challenging. Already very high prices. Nobody happy about this situation. So biggest concern to me is Japanese yen's depreciation.
Sayuri, thank you so much for your time today. Sayuri Shirai, former Bank of Japan Monetary Policy Board member. And still ahead this hour, the latest from China as Mark Carney becomes the first Canadian Prime Minister to visit in 8 years as Beijing courts world leaders amid growing concerns over Washington's policies. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Prime Minister Mark Carney has arrived in China on the first state visit by a Canadian leader in 8 years. He'll meet Premier Li today ahead of Friday talks with President Xi. Our Chief North Asia correspondent Stephen Angle joins us from Shanghai. Steve, it does look like Carney's looking for new friends, perhaps alternative markets. What's at stake for Carney in China?
Well, we do know, we just have to, listen to the words from Mark Carney. He wants to essentially double over the next decade exports to non-U.S. markets. He's diversifying for sure. I mean, China is a big potential beneficiary of that. They already ship crude, iron, copper, rapeseed. Well, they had up until China started adding a bunch of tariffs on the canola, which is rapeseed as well, which was a big export that Canada had to China. But again, there's been a frosty relationship of late over the last 8 years, really, between Canada and China that really started in 2018 when Canada arrested the Huawei executive and daughter of the chairman, that was Wang Mengzhou, at the behest of the United States. That set off a frosty relationship. There was the arrest in China, of course, of the two Canadian officials, the two Michaels, as they were known, Michael Kovrig and Michael Spavor. And that really set off a bad relationship between the two. And in 2024, Haslinda, we saw Justin Trudeau, then Prime Minister, essentially add those restrictions and levies on rapeseed as Canada was doing their own mimicking of the United States trade policy by adding tariffs on those exports that they had to China, like on aluminum and also on steel. So there's been some bad blood. So Mark Carney is there essentially to repair relations, build up an export market, and talk with industry giants. Already we are hearing that he has met this morning with the co-chairman of the big battery maker, CATL, and also he plans to meet, according to Canadian officials, with the chairman of the China National Petroleum Corporation, the big, of course, national oil giant in China.
We know Carney is not the only world leader visiting Beijing, but Beijing is rolling out the welcome red carpet to the fairly long list of leaders. Why is this the case?
Well, there's an opportunity being seen by Beijing with the chaos that was created around the world by the Trump administration tariffs. Already it's happening. There's a redrawing of trade maps around the world, and there's no secret that there's been some friction between Canada and the United States. So again, Carney is here looking at alternatives, and other world leaders, whether it's Emmanuel Macron, who was here in December, whether Anthony Albanese of Australia was here twice last year. We had the president of South Korea here earlier this month. Now we have Carney, and coming up in the coming days and weeks, we're going to get the Prime Minister of the UK, Keir Starmer, and also the Chancellor of Germany, Friedrich Merz. So it's not a coincidence that as they redraw the trade lines around the world, people are increasingly looking at a resurgent China.
Trade relations getting redefined. Our Chief North Asia correspondent, Stephen Angle, thank you for that perspective. Still to come, hear why our next guest expects AI infrastructure spending to reach $500 billion this year. We'll have more on the markets with SIVE's Head of Investment and Advisory, Ritesh Ganeriwal. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights. It's a quick look at where markets stand. Asia taking a breather, down for the first day in 3, but coming off record highs, by the way. The losses today being led by the Nikkei 225, down about 0.9%. The TAIEX also in negative territory. We're keeping an eye on the Japanese yen. It is currently about 0.1% lower versus the USD. Of course, there's been a lot of pressure on the Japanese yen on the back of expectations that Takaichi will call for a snap election. We're also keeping an eye on shares of TSMC as the chip giant prepares to release its fourth quarter results due later Thursday. The stock has been on a blistering rally powered by the AI boom. For more on this, Bloomberg's Asia tech correspondent Annabelle Drulis joins us from Taipei. Belle, what are investors watching out for? It is one to watch, definitely.
Yeah, absolutely. Of course, the biggest company by market cap in Asia, and we're really on that countdown now to the numbers because they're due in an hour. It's time from now. We're here at the hotel in Taipei where the earnings press or the investor conference as well is going to kick off in about 90 minutes. So lots of anticipation for the figures, but certainly the expectations are strong because, as you know, companies that are listed on the Taiwan Stock Exchange do need to report monthly sales figures. So we got October, November, December. Together, those told us that we're expecting revenue to have climbed around 20%. Now, that would be ahead of analyst expectations. We're also off the back of CES, of course, and you heard lots of different bullish announcements from the likes of AMD, but also NVIDIA affirming that the Rubin architecture is going to be ramping up as well. So that's a positive factor for TSMC, of course, the assembler of these advanced chips. So in terms of the figures for today, lots of focus as well on what the margins are going to be indicating to us. We could be seeing them between 59 to 61%. That would be a 3-year high for the fourth quarter of last year. Again, just really speaking to the capacity utilization, but also really the strong pricing power that the company has in this market.
Belle, what do we know about TSMC's plans in the U.S., even as Taiwan continues to negotiate with Washington on tariffs?
Yeah, well, it's absolutely perfect timing for us to be here as well, because what we're hearing from sources is that the Trump administration is really very close now to signing an accord or clinching a deal with Taipei on this very issue. And it really has TSMC, at least according to our sources, at the center of it, because in exchange for lowering the tariffs on Taiwanese goods that are being exported to the US or imported there, from 20% down to 15%, actually TSMC could be looking to pledge construction of 4 further fabs in Arizona. So Arizona is the site of their big build-out in the US, and they've already promised 6 fabs to be built there, 2 advanced packaging plants, but adding a further 4 is a very significant build-up of capacity, and also means a lot of, in terms of capex, because each fab costs around $20 billion to build. We don't, of course, have any confirmation on this. It is according to people familiar with the matter, but it will be very closely tracked what we get in terms of the capex today, because for 2025, the full year is expected to be between $40 to $42 billion. Every analyst you talk to is saying that next year that could be $48 billion, even higher. So lots of focus on what that's going to be used for just in the US, but also, of course, building out those advanced nodes in particular.
So focus on the capex plans in the U.S. I mean, this is one of the most influential stocks and companies in the world. What else should we be looking out for?
Yeah. Yeah, that's right. I mean, I said advanced nodes, and I think that's going to be really closely tracked as well, because N2, according to different analysts, is saying that we should have actually started to ramp up really at the end of last year. So exactly how much they're expecting N2 or the 2-nanometer technology to contribute to revenue in the fiscal or full year 2026 is going to be one to watch. I think a really interesting, another component as well is going to come down to smartphones, because we saw smartphones contributing around 30% of revenue, or demand from smartphones contributing around 30% of revenue in the third quarter of last year. But given you've got all these concerns and jitters that are starting to form in the devices market, not just around those devices, but also in PCs as well, that memory chip crunch looming, does TSMC see that having any sort of bearing as well? So lots, of course, to discuss. And as I said, we've got those earnings dropping in about an hour's time from now. We've got the press conference coming up, and we have a really big interview with the CFO as well that we'll have playing out tomorrow.
And we are waiting in anticipation, Belle. Thank you, Bloomberg's Asia Tech correspondent, Annabelle Drewlers in Taipei. We'll hear more from TSMC on their earnings and their business outlook. Catch our interview with Senior Vice President and CFO Wendell Huang on Friday. Well, our next guest is optimistic about AI investments, but suggests broadening market exposure. Let's get insights from Ritesh Ganeriwal, Head of Investment and Advisory at Saif, a digital wealth management platform with over $10 billion in assets under management. Ritesh, good to have you with us. So still upbeat. The question really is, how do you play the AI space?
First of all, Haslinda, thanks for having me here. It's a pleasure. Look, we are entering into 2026, and we are still very positive on the global economy at this front. We see steady growth, we see lower inflation, and we see an accommodative policy. And still a lot of things will be determined with earnings growth, and that will obviously be led by AI. So that continues to be the core driver of returns as we head into 2026. As you were covering earlier, we are in the full-phased infra build-out of AI with CapEx, touching new highs. Now we are projecting close to $500 billion of capex spend from the hyperscalers into 2026, and that will continue to spur demand on the AI side. Of course, I think as we move forward, the bigger question comes in terms of how does that capex intensity translate into ROI, and that's where the focus is going to be.
It wasn't that long ago when people talked about the need to be in hyperscalers, the need to be in Mag 7, but we've already seen that rotation. What has changed fundamentally?
I think overall what has happened is on the hyperscalers front, they're already priced to perfection. You have all the details out there. And as I said, the scrutiny is going more from the capex side to the ROI kind of translation side. But if you go into the broader value chain of AI, that's where a lot of action is still happening, still in the picks and shovels. There is chip shortage. So you've seen start of 2026 already, the chip companies, whether it is Intel, Micron, in Asia, SK Hynix, Samsung, they have led, the returns even in the first 15 days of 2026 with over 15%, year to date. So, alongside that, we also see, power as, one of the acute shortage, standpoints right now in the AI build-out phase. And on top of that, I think what is more interesting is how does the AI adoption, pan out, which means, how does some of the database, the platforms that are adopting AI and that are being then used by industries across the board, how is that panning out?
And AI is a long-term play. We talk about ROI, and that takes time. How is your AI portfolio looking?
Yeah, so as I said, what we are encouraging clients to think about is to broaden their exposure to AI beyond the hyperscalers into, the picks and shovels, but also into the, application side of things.
But how about in terms of geography? It's not just the U.S., there's also China, there's Taiwan, there is Korea and Japan, for instance. How should you be positioning for all of that?
Yeah, look, I think overall, when it comes to the supply chain, obviously we are very positive about the Taiwan market, the South Korea market, as well as China. China, in fact, has been leading on the AI forefront and now going even more global. In fact, almost 30% of the AI usage is now, through a Chinese open source AI technology.
For a market like India, should it be valued differently since it is not really an AI play?
Absolutely. I think overall, if you look at India, obviously it's been challenging. It is one of the markets that did not, it bucked the trend in a way, right? EM markets were up, close to 40% in 2025, but India, on the other hand, was very flat. Now, obviously, it was weighed down by the tariff overhang as well as, FII's outflows, plus the currency kind of continuing to depreciate. Now, if you look underneath, however, the data tells a very different story. We are seeing very, very strong growth momentum. The GDP grew at 8.2% in the last quarter. India became the fourth largest economy in the world, right? And it's now reclaimed the crown of the fastest major global economy as well. Alongside that, you're seeing that there is a lot of policy stimulus still in place with the RBI cutting rates, the GST reforms as well kicking in. Valuation-wise, yes, India has always commanded a little bit of a premium, but overall, if you put all of these perspectives into place and the significant kind of like under-positioning that investors also have with respect to India, I think if you put all of that together, the India growth trajectory is very much intact. And, from an opportunistic standpoint, if you are willing to take some volatility because the tariff overhang kind of like remains for the time being, if you can play it in the next 3 to 5 years, that's where I see India as a, great place in terms of taking that exposure as well.
It's hard to imagine a country with 8% growth having such a weak currency, a currency that was the weakest performer in the last 12 months among its Asian peers. Why isn't the currency reflecting the strength that you're telling me about the economy?
Yeah, I think, look, on the currency front, obviously the tariff side is a big overhang at this juncture. And usually when there are big tariffs, the currency depreciation helps, to balance some of that in terms of the exports, because India is a big exporter to the US and it contributes meaningfully towards the, Indian export side as well. So obviously from that standpoint, the currency has been weighed down, but it also comes in phases, and I believe that the RBI will be much more intentional in making sure that it doesn't go too haywire from here beyond that 90 rupee a dollar.
And when do you see the reversal in the Indian equity market? Because despite all the factors boosting, I guess, its potential, it's still a lackluster performer among its peers in the emerging markets.
Yeah, it has been. But as I said, the structural growth story remains very, very intact.
Is it a 2026 story? Is it a 27 story? When do you see a turnaround?
I think it will still be a bit volatile into 2026. But when I think about a more longer-term allocation, that's where I see India to be, a core driver of returns within the Asia context as well.
Among the emerging markets, of course, they've had a fantastic run, great end to 2025 and a good start to 26. Which of the other Asian EMs that have the potential to really outperform?
I believe EM as a whole has a potential to outperform, and there is a global kind of like rotation happening at this juncture, because the first time in over a decade, the US market was one of the weakest performing markets in 2025. And what is happening on more broader basis is on the emerging market side, the earnings trajectory is shaping up really well, and the growth acceleration is kicking off. And obviously in some parts of the emerging markets, or Asia in more particular, we are seeing the leadership coming from China, from South Korea, from Taiwan, and that I think will continue to happen as we move forward as well. So overall, very positive in terms of outlook. The earnings momentum should continue, as we move into 2026.
And that will be reflected in the currencies. Which crosses are you looking at for?
We usually don't, focus too much on, cross currencies overall, but given the tariff overhang, usually what I've seen is the currencies will remain, range bound at this juncture. But overall, given, where China is, they have obviously been in a more, weakening, trajectory with respect to currency, but their exports have surged over time. And as they start to focus a little bit more domestically, they'll have to balance that part out as well.
Ritesh, thank you so much for that. Do stick around. SAIF Investment and Advisory Head Ritesh Ganeriwal is sticking around. When we come back, we'll discuss the outlook for precious metals following the ferocious gains at the start of the year. But meantime, we have some headlines to alert you to. We have China Vanke proposing to extend a 3% yuan bond payment to December 15th, 2026. It's also proposing to extend the grace period for 3% bond to 90 days. And we talked earlier about Carney's visit to China. We're hearing from Premier Wang Yi saying that China-Canada ties have impact beyond bilaterals, and China and Canada should handle issues with respect. We'll bring you more as they come along. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. Let's do a check on commodities. We have gold and silver retreating, but remember, silver surged as much as 20% over the past 4 days alone. Currently, silver down about 5.8%. It did slump as much as 7%. Perhaps some profit taking that we're seeing when it comes to those precious metals, partly because, of course, concerns over geopolitics has also declined, particularly the situation in Iran. Again, gold at $45.91. JP Morgan expecting gold to get to 5,000. Silver spot 87.81 right now. Now, Ritesh Ganeriwal, head of investment and advisory at SAIF, is still with us. He says beyond just a hedge against inflation, the surge in precious metals indicates a stronger recognition of the value of diversification and risk management. So it is about diversification. It's quite different from how it was looked at just maybe 2-3 years ago.
Absolutely, and with the kind of geopolitical uncertainty that you have seen unfolding over the last couple of years as well, gold has really become one of the core building blocks of portfolios for our clients as well. And, as we move forward, we believe that we are firmly in a disinflationary kind of regime, and we see, more rate cuts happening towards the second half of this year, which basically means that US dollar continues on its depreciation trajectory, maybe not at the same pace that it saw in 2025. But that bodes well again for precious metals and gold in particular.
And for gold, it's also about how central banks are buying a lot more these days. I'm just wondering, how much gold should you be holding in a portfolio? I mean, in some conversations, they say 3, 4, or 5%. Should you be holding gold more if you look at gold as a diversifier?
So typically in our portfolios, we have between 5 to 10% allocation to gold. We believe that's kind of like the sweet spot at which, gold adds returns, but also from a risk-adjusted standpoint, it adds value to the overall portfolio. So that's typically, the range in which we, allocate gold in our investor portfolio.
And when it comes to silver, there's a lot more volatility.
Absolutely. I mean, that's been on a tear, 150% returns in 2025 and continues, as you said, like 20+% returns. There is a little bit of rally coming off now, but overall, I think there is both supply and demand drivers to the silver prices as we speak, and we can go into more details on that as well.
Yeah, how do you trade commodities, in particular precious metals?
So we don't particularly take view on individual commodities. We see it in our portfolio construct, and that's where gold has been one of the key components of our portfolios through our asset allocation process. But on the whole, we do see that when it comes to U.S. dollar depreciation, the geopolitical uncertainties, etc., these do become core building blocks of portfolio. Silver, in particular, if you're taking a more speculative view of the market, then yes, you could have made a lot of returns in 2025, and it can continue to grow higher in 2026 because on the supply side there is curbs on supply coming in from China, and on the demand side there is talks of a new solid state battery coming in, which requires as much as 1 kilogram of silver. That will spur demand to a very great extent, and right now I think the overall production of silver and the curbs that are coming on the supply side can keep propelling silver higher as we move forward.
How do you see commodities performing in 2026 versus other asset classes?
We are generally positive on commodities in 2026 as well. Aside from oil, which we believe that overall will remain more or less range bound, there is obviously a lot of geopolitics that will drive oil prices in 2026, but overall we are positive on commodities as we move into 2026, and again see it as a portfolio diversifier and a risk management tool for our clients.
What are the biggest themes that you're watching out for the year? We know that Fed policy is one of them. I mean, expectations are that the Fed will cut 1 or 2 times. What's your own expectations? How might this play out in the markets?
Yeah, I think overall there is a little bit of a division in view in terms of how or where the rates will settle end of 2026. We believe the rates will be around the 3.1% mark, meaning that there are 2 rate cuts. Now, in the more near term, we don't see any rate cuts happening in the first half of the year, but come June, July, then that's where you will potentially see those rate cuts happening. And this will be driven more fundamentally from, the structural disinflation that we are projecting as, we move forward, and the unemployment story kind of like deteriorating. Now, the latest numbers are out on the inflation side. The core inflation was 2.6%. Grew by 0.2% on a month-on-month basis. So overall, very much in that mode. Of course, tariffs still is an overhang. So far, the tariff-related inflation has not been passed on to consumers. So you might see some of that coming in as we, go into the next couple of months. But in my opinion, that will remain kind of like a one-off. And the more structural drivers of disinflation, in our opinion, will be, slowing wage growth, shelter inflation, which is a key component of inflation, cooling off as well, and overall productivity improving too.
Is Fed independence and the successor of Jerome Powell something you consider, when coming up with your own strategy?
Not really, though. I think in the short term, it does create a lot of volatility. Whenever you hear, these news bites, you see the U.S. dollar kind of like weakening, the, yield curve kind of steepening as well. So these are short-term, impacts that we do see on the market. And overall, if there is a big dishevel in this regard, there is a question on the objectivity of the Fed that comes into play. But in terms of how we map out the market, we believe there are enough checks and balances in place, and which basically means that the Fed will still be guided with its dual mandate of inflation and full employment.
And of course, we're awaiting the Supreme Court decision on Trump tariffs. Might that sway one way or the other where you put your money?
Not really. Again, I think, it'll create a lot of short-term volatility. Particularly, amongst the more tariff-sensitive sectors like consumers, etc., as well as tariff-sensitive countries like India, Brazil, which have been, more heavily, tariffed in the Trump regime. So if there is any relief on, those fronts, you can see some of that rally coming in. But overall, I believe the administration will also be swift to implement the tariffs in some other formats and under some other authorities as well. Overall, again, whenever whenever you see these things on a more currency standpoint, an asset class standpoint, the currency on the US dollar depreciates and the yield curve steepens because, if tariff-related revenue is taken out of the system, then, the big, beautiful bill and the other fiscal stimulus that is being pumped in calls into question, the debt sustainability aspects as well.
Ritesh, thank you so much for joining us today. Ritesh Ganeriwal, Head of Investment Advisory at Saif. Now, before we go, here's a look at our guests for tomorrow. We'll talk investment strategy with St. James Place and the Franklin Templeton Institute. Plus, veteran investor Mark Mobius will be joining us to share his outlook on emerging markets. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.